Live from Singapore, this is Insight with me, Haslinda Amin, where we dive deeper into the stories that matter with crucial context and sharp analysis. South Korea's president reportedly set to face an impeachment vote as early as Saturday over this week's shock declaration of martial law. But BOK Governor Rhee tells us exclusively why he sees the economic and policy impact being short-lived. Turmoil in France, too, as the government falls, with far-right leader Marine Le Pen joining a left-wing coalition to pass a no-confidence motion. We'll dive into the investment impact and geopolitical fallout from both countries with our panel. Andrew Freris, CEO of Ecognosis, will be joining us, along with INSEAD Professor Pushan. And we get a global trade outlook with the CEO of logistics giant DP World, Sultan Ahmed bin Sulayem, sees opportunities across Asia and is bullish on India as well as China. Well, markets in Asia digesting the effects of political crisis in South Korea and France. Korean policymakers continue to urge calm in financial markets after the martial law fiasco that stunned the nation. Korean media say the opposition is seeking an impeachment vote against President Yoon as soon as Saturday over his abortive attempt to impose martial law. We're also hearing that Yoon may not address the nation today as earlier expected. For the latest, let's bring in our Chief North Asia correspondent, Stephen Angle. So, Steve, will he, won't he speak today? That is the question.
It is the question because we have a lot of questions for him, and he has some answers, obviously, to the Korean people as well as global markets. Again, will he apologize? Will he double down? Will he fight for his job, which potentially could be in jeopardy? Obviously, you mentioned earlier that there could be a Saturday vote within the parliament on that filing of impeachment by the opposition yesterday. And again, we're hearing as well from the ruling party that they're going to try and oppose that vote. But again, will President Yoon be able to hold the ranks tight within his ruling party and stem the defections? Because already, since that shock announcement you're seeing there late Tuesday, where he declared martial law in a very tumultuous 6-minute speech to the nation, it's up in the air right now whether his party will stand by him. So we were expected, according to local media, to have a speech from him, or at least an address from him, within this last hour. It has not happened yet. Local media, YTN TV, is saying it probably won't happen because there have been those reports as well from Yeol and others that vote will happen Saturday. So he has a couple of days to kind of get his ducks in a row, canvass support within his own ruling party, and see what strategy going forward ahead of that potential, impeachment vote on Saturday. But again, we're also getting headlines. The Bank of Korea Governor Rhee has been speaking to reporters. Of course, earlier he spoke to Bloomberg exclusively. Now he's talking to local media, essentially trying to reassure the markets, reassure investors, reassure the nation that this is a short-term crisis right now. He says slower export growth and new U.S. administration are bigger concerns than this short-term crisis. Turmoil having no impact, he says, on GDP outlook for now. And he says, essentially, volatility likely to ease gradually, barring any new shocks. But this is an ongoing issue, obviously, in Seoul that has not been resolved anywhere, is not going to be resolved anytime soon.
Steve, as you said, lots of questions, but one key one is what happened? I mean, what was Yoon thinking when he declared martial law? There's still no clarity on that.
Yeah, well, that's an interesting question because clearly the nation reacted that he miscalculated. And we also know that within about 6.5 hours of that very risky move, they withdrew that, order for martial law, even though, as you can see, soldiers were out on the streets. It was a shock even to some within his own party. Even the party leader said it was a mistake. So again, it was a very, very risky move by him. And we wanted to know as well in any address what really was the thinking. We do know that his defense secretary, his defense chief, took responsibility, full responsibility, offered to resign. President Yoon has accepted that, has already replaced the defense chief. So not necessarily saying that he is going to be, the scapegoat there, because clearly Yoon was before the cameras and made that very risky gambit. But over the next couple of days ahead of that possible impeachment vote, much is at stake for this man's presidency.
That's right, and you got to wonder who else knew about the martial law plan. Chief North Asia correspondent Stephen Angle, thank you so much for that. Now, even before President Yoon Suk Yeol's shock martial law announcement, the Kospi and the Won were among the world's worst performers, partly due to fears there would be major casualties of Donald Trump's second term. This led to a surprise rate cut from the Bank of Korea last week. Well, I asked the central bank governor whether he will have to weigh more support for the economy and the currency in particular.
Korea has been on the flexible exchange regime for a long time. And, we are not targeting for specific level of the exchange rate. But on the other hand, because Korean won is not internationalized, we are concerned on the volatility of our exchange rate and the pace of the exchange rate movement. So definitely using the integrated policy framework, we are trying to stabilize the abrupt movement of exchange rate. But at this moment, I think if we just look at what happened yesterday, for example, as I mentioned, the Korean won depreciated quite sharply, about 3% immediately. But now I think we are slightly above the level that we had before this political event happened. So I think in some sense, using various tools, including our liquidity injection, in the FX market too, I think we are now managing the situation better than you or some other people may as a concern. My basic point is that if you look at what happened in our political arena, this tension happened because of this event has happened because of political tensions, not any problem in economic fundamentals. So in that sense, I think that the impact will be short-lived, and we can focus on the
right.
economic strengths and the weakness of Korean economy rather than political side effect.
That was Bank of Korea Governor Rhee speaking to us exclusively, trying to allay concerns in the markets. Now let's discuss what's next for South Korea with Andrew Freris, CEO of Ecognosis Advisory, a global financial and economics consultancy. Also with us is Pushan Dutt, professor of economics and political science at INSEAD, whose research interests lie at the intersection of international trade, economic development, and politics. Pushan, let's start with you. I mean, it's a fast-moving story. A lot has happened in the last 24 hours. Have we seen the worst?
I think the worst seems to be over. So a lot of credit goes to the Korean people for stepping in and in favor of democracy. We are seeing, movement towards right-wing authoritarian governments everywhere, but in this case, the institutions actually held. What was surprising was, as your report mentioned, the sheer incompetence of this, because the entire thing seemed to hinge on making sure that the parliament doesn't get into session, and then they sort of failed in doing that. So, they'll follow the usual steps. First, look for a scapegoat. The defense minister was the primary candidate, and he has now resigned. But I think the Korean people sort of have long memories, and they are not going to let go of this easily. So from the president's perspective, I think resignation is his best option because he's likely to be impeached soon, especially when you see the split of the votes that happened, because it was unanimous and you need a 2/3 majority for impeachment. So that's very doable. So I think his best option is actually to resign.
And when it comes to the markets, Andrew, I mean, there seems to be some stability, right? Take a look at where we are in terms of the Korean won. It is down just a tad, despite the fact that it's just day 2 of this crisis.
Well, let's get one thing straight, actually. Both the Kospi and the won were on declining moods. The Kospi was since about September, so approximately was the won. So all that has happened is it accentuated the weakness of the won and the drop in the Kospi. And then the Kospi actually rebounded and the won has stabilized. So as the governor we just heard, again, this is not about economics, this is about politics. And hence what you see effectively is what you're getting. What I'm actually telling my clients, if you look at Korean assets, forget any kind of a political risk because there isn't any, okay? It's simply concentrate on the ongoing trends, forgetting the hiccups. The final point that I would like to raise is, of course, that the notion that there was some kind of an internal conspiracy led or supported by North Korea is so preposterous. And of course, it was completely negated by the instant vote to revoke the oh gosh, I've forgotten now the actual word for that. I do apologize. to revoke the emergency measures, and of course, the passing the legislation, passing the vote for him to be impeached.
To revoke the martial law, you mean, right, Andrew? I'm just wondering, given your views, Andrew, the risks are not as high as some people may suggest.
Is that my question? Sorry, I didn't quite catch. Yes. The risk actually, the risks are not any significant better or worse than they were 2 days ago, because the movements in the market, the movements both in the won and in the Kospi were significantly the same movements that they were before. So it was not that, let's say, the won was strengthening rapidly and the Kospi was doing exceptionally well, which it hasn't. Actually, both of them worsened, and they more or less flattened out.
And Pushan, even though you say the worst may be over, this political crisis could go on for months. The fact of the matter is that even with a new prime minister, the challenges are the same.
Is this about Korea?
Yes, for Korea.
Yeah. So yes, the challenges are the same. But this is standard political issues which, nations like Korea with strong institutions are quite well equipped to handle. So, I would actually like to respectfully disagree a little bit with the governor's point earlier that this is not about politics. There is an element of politics there because, what really matters is not the quarterly number or what's happening to the won now, but what's really going to matter is what happens when the Trump administration comes into place and triggers a trade war. And that is this key source of uncertainty, which applies not just to Korea, but also to many other countries. It's particularly acute for Korea because Korea runs a $30 billion trade surplus. So the US runs a bilateral trade deficit. And Trump is always, he always looks at bilateral trade surpluses and trade deficits. Last time when he was in power, he also created a lot of chaos in terms of going to Kim Jong-un and, threatening to get rid of the security umbrella. So those geopolitical shocks, not domestic politics, but those geopolitical shocks are likely to play a significant role as to how markets behave, how the currency behaves. The Korean president was actually learning golf so that he could bond with Trump. And maybe he should have spent more time on the golf course rather than doing a coup.
So you're saying that Korea will get caught up in Trump's crosshairs. Are people like Andrew then underestimating the risks in the market?
But that's the entire problem with Trump, right? So, if you look at the tariffs that he just threatened, which was, everybody had thought that the tariffs would be very high against China, but he imposed much higher tariffs on the US's closest trading partners, which is Canada and Mexico, right? And, he threatened about 25% on them and 10% on China. So with Trump, it is actually really, really hard to tell. He sometimes anchors on the last person that he's talked to, and that's a completely random event. All we know is that the uncertainty is going to be very high, and markets don't like that.
Andrew, even before this political crisis, when it comes to Korean assets, they've been trading at a discount. They call it the Korean discount. And some are suggesting that this complicates matters even more, that discount will be even higher now. How are you looking at that? What kind of opportunities do you see despite that?
Well, I must admit, in terms of the Korean discount, I'm a little bit puzzled about that because GDP growth has been decelerating in the last 3 quarters, and we're waiting for today's number, which in no probability is going to have the number 1 in front of it as opposed to the number 2. Okay, and the other aspect was political risk, but the political risk was from North Korea, not from a domestic one. And also there was an aggregation of different, let's say, considerations. One of it is the role of Korea in, let's say, the Asian emerging NATO force, in inverted commas, because Korea and Japan, plus Australia, are 3 of the most important, well-armed and well able to produce arms and arm themselves places, and they're going to play a very significant role in what is being developing now as the containment of China, for better or for worse. And of course, there is always the role of North Korea. So all this was something that was suppressing and oppressing what the Korean performance would be like. And of course, the continuous issues concerning microchips and concerning electronic inputs and exports, given what we've just heard about the possibility of further restrictions of chips coming out or going into, for that matter, Korea. So the discount was a little bit of a vague notion. The economy was not performing well, neither did Kospi, indisputably about that, but for a number of rather mixed reasons rather than any single specific reason that would justify the discount.
Andrew Freris of Ecognosis Advisory and Pushan Dutt of INSEAD are sticking around to dwell deep into the French political crisis next and its market implications. Hang tight. Still to come, we'll get insights on the global trade with logistics giant DP World. Hear from Group Chairman and CEO Sultan Ahmed bin Sulayem later this hour. Keep it here with us. This is Bloomberg. Now to another failed political gamble, this one by French President Emmanuel Macron. His move to call snap legislative elections in June was seen as a strategy to keep the far right, led by Marine Le Pen, at bay. Instead, Macron's grand plans backfired, with the elections making Le Pen the top parliamentary power broker. And she's now allied with left-leaning parties to topple Prime Minister Michel Barnier, who was just appointed 3 months ago. It leaves France with no fully empowered government and no clear path to stability for months to come. The public is frustrated, and there's a growing budget crisis. Investors have driven French yields to the level of Greece's, and the benchmark equity index is on track for its worst year since 2010 relative to its European neighbors. Let's bring back our panel. Andrew Freris, CEO of Ecognosis Advisory, and Pushan Dutt, Professor of Economics and Political Science at INSEAD. Andrew, let's get you started. I mean, the markets are pretty much priced in the outcome, but the risks are still very unsettling.
The risks are unsettled to the extent that nothing is going to happen in terms of a very clear political decision till July 25, because they cannot have elections earlier than that. So Le Pen is going to be a kind of a lame duck prime minister whilst they are sorting out their internal conflicts. And let's not forget, the just outed prime minister was not a member of Macron's party. It was a member of his own party. So you had 3 competing coalition parties involved in that on a budget that was highly controversial because, of course, it involved increasing taxes and reducing expenditures in order to bring down the 5% or 6% budget deficit. So Le Pen might live to regret that it triggered all this by not playing along and saying yes to a lot of the controversial parts of the budget and let the existing administration move on, as opposed to her, well, now she got it, well, let's see what she's going to do with it.
And Pushan, is this perhaps a new period of instability for France?
I think it's just a continuing period of instability. So some might think about blaming Michel Barnier because he has a good reputation for compromise when he worked through the Brexit negotiations. But he was in an impossible bind because Marine Le Pen kept moving the red line. She would put down a red line and move it. And looming large was this case pending against her, where a verdict comes down in March. And if she loses that case, then she will be banned from running for election. So you have Jean-Luc Mélenchon, who's getting old and he wants to become president, and Marine Le Pen, who has this court case, she wants to become president. So their incentives was to create as much chaos as possible and hope that Macron resigns and they call for another presidential election soon. But Macron, of course, realizing this, especially now that Donald Trump has come into power, he's going to hang on by his teeth. So he's not going to resign, which means lame duck governments probably choose a prime minister for Jean-Luc Mélenchon's party. But while all this happens, the budget doesn't go through. About 17 million French households actually experience an increase in taxes because the inflation thresholds for the tax brackets will not be adjusted. And that will lead to further anger and turmoil and, maybe people on the streets.
So without a debt, without the budget, are we looking at a debt crisis? And what would that mean for the economy, which has been pretty flat when it comes to growth?
So, I would not worry so much about the debt crisis because, the previous debt crisis where, Spanish bonds, Italian bonds came under threat, that was resolved quite well by the European Central Bank. So the European Central Bank will sort of not let this blow up too much. And they've done it before. Remember Mario Draghi's famous dictum that I'll do whatever it takes. Now, I think a bigger question to ask is whether the debt limits and the fiscal deficit limits of 3% fiscal deficit, these limits are actually viable or not in today's world, because much has changed since they actually put these limits in place. So, industrial policy has become very big. Populations are aging, right, and there's a war going on in Europe, so they need to spend. So I think a better idea would be to gradually and even substantially raise these debt limits and deficit limits.
Andrew, of course, in the market, we're seeing it playing out in the bond market in particular. Are you expecting French bond spreads to widen?
No, actually, they have gone up and down rather than widen straight away. Currently, versus the Bund is about 82. They went as low as 72, okay, and then they have increased now to 82. And that's perfectly okay. Unfortunately, this created a slightly absurd game of comparisons, and that is with Greece. Greece is BBB minus, and France is AA minus. And the fact that their spreads against the bonds are approximately the same does not mean that France is now as bad as Greece was at the time that it had its own crisis. But the Greek crisis was an existentialist crisis because they had a huge deficit, but they were not doing anything about it. They were expecting somebody else to do it. And also they were planning to leave the euro. Now the poor French, or at least Le Pen, they're not planning, or Macron, they're not planning to do anything of the kind. The whole issue was what to do exactly about the budget. And on top of all that, they are having the pressure now to spend more on defense, which leads me to another matter. Right. And well, never mind, that's a different issue altogether, but it's an additional aspect of what faces France.
Andrew Freris of Ecognosis Advisory and Pushan Dutt of INSEAD, we thank you so much for your insights today. Still to come, global logistics giant DP World is confident that China's leadership can deliver economic growth and recovery. More from Group Chairman and CEO Sultan Ahmed bin Sulayem next. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight.
There's a set of institutional relationships between the Fed and every administration. I fully expect that we'll have the same general kinds of relationships that we have, institutional relationships for example, with the Council of Economic Advisors, but most importantly with the Treasury Department.
The Fed chair speaking at an event in New York, Jay Powell says he's expecting a good relationship with the incoming Trump administration. Avril Hung has been watching this for us, and Avril, Powell downplaying perhaps the prospect of tension.
Yeah, I think this is something that observers of the Fed and the incoming Trump administration have been looking for clues on, right? Is there any potential for friction? Because we know how Trump has pretty strong views of the Fed chair, particularly his monetary policy decision-making. And Powell, quite recently, remember, was asked if he would resign if Trump asked, and he flat out said no, and that's not something that's permitted by law. That's something he reminded us about. So I think we were just kind of watching out for any potential for friction, and the Fed chair here is providing some reassurances that it's going to be pretty much business as usual. He talks about the institutional relationship that the Fed has with past administrations and the current one as well, and that, you know, the next one is not going to be any different, even with the Treasury secretaries, right? He acknowledged that he doesn't know Besson well, but, you know, the relationship that the Fed has with the Treasury secretaries, that's something that's going to be consistent, I feel. So he also talked about Fed independence, and I think that was a key one. That's a concern a lot of observers have been keeping an eye on. Something he highlighted was that there's a lot of support for this on Capitol Hill, and that's allowing them to make the best possible decision about things. It was also interesting how he highlighted cryptocurrency, Bitcoin, as a speculative asset, right? But today we're still seeing Bitcoin popping past 100,000, that meteoric rise. And of course, this is against the backdrop of Trump's nomination for the SEC chief.
And also expectations that Trump would be pro-crypto, and hence we're seeing that rally. We've seen that massive rally so far. I mean, when it comes to the Fed and Powell, it's also about what he said about the economy. He's really bullish the economy, and that, of course, has sent stocks higher.
Absolutely. I think he's really confident about the U.S. economy, and he himself said that, you know, it's looking even better than he previously thought. And you look at recently how consumption in the U.S. has been quite strong. So the data backs this up. You look as well at how he's sounding pretty confident at happy where monetary policy is. So he interestingly pointed out that they're going to be quite cautious when they look for the neutral rate, or at least try to find that elusive neutral rate. So to some analysts, this sounds like a Fed chair that is trying to keep as much optionality on the table as possible for the meeting week after next. And indeed, after Powell spoke, we didn't really see markets pricing budging of a December move. They're still not fully pricing in December 25 basis point rate cut. Don't forget, on Friday, we still have those non-farm payrolls to get through as well, Has.
And it is a Fed that's data dependent. I think the lack of clarity really is about what's going to happen in 2025. What may they do, what may not, and it all depends on Trump's policies.
Absolutely. And I think at this point, it's really about whether the specter of tariffs influences inflation. If it's inflationary, what's that going to mean for treasuries and, you know, the knock-on effects potentially on the greenback and the markets as well?
Also worth noting that inflation is closer to 3 than 2. So, Avril Hong, thank you. Now, as the world awaits Trump's tariffs, Dubai-based logistics giant DP World is optimistic about trade growth in Asia, including India and China. CEO Sultan Ahmed bin Sulayem also spoke to us exclusively about why he's not too worried about China's lackluster recovery.
If you look at Asia, China trade with the Asian is going to reach $680 billion in the next 10 years. This is a huge growth. If you look at the BRICS countries, their trade among each other is close to $16 billion compared to OECD is about 13 something billion. So you can see growth in non-Western markets is huge. In Africa, the demand for product from China have doubled just in 1 year.
So where do you see the biggest growth for 2025?
We see in India, definitely big growth. That's why we're investing a lot in India. We see in Indonesia growth. We see in China growth, steady. We recently started a service, a new route connecting Malaysia through Thailand and our logistics partner Laos into China, and we're sending like 2,000 containers every week, and that's growing.
Taking a look at 2025, what gives you hope amidst all the uncertainty that people are talking about?
Growth in the market gives me hope. A lot of products still need to be delivered. A lot of shortage of products around the world because of the pandemic. We haven't yet recovered from the pandemic. Bear in mind, China has just opened only a year ago or so. And a lot of factories are still dealing with the backlog of the cargo that they haven't produced. And this is not in China, that's in many countries in the Far East. So it gives me hope that growth will continue.
You talk about China a lot and the expectations that China will recover. When do you see full recovery happening for China?
People look at the number in a misleading way. China, in 2010, they had 10 trillion trade and they had 10% growth. And now they have 23 trillion trade with maybe 6% or 5.5. 5.5 of 23 trillion is more than 10% of 10 trillion. So people don't look at the big number. They look at comparing two instances. Oh, China doesn't have 10% growth. Nobody can sustain 10% growth. It's a huge market.
But China's recovery has been pretty lackluster, not as fast as people anticipated. When do you see China going back to its full potential, even if it's 5% growth? Because right now, it's looking at sub-5.
Well, I have confidence in the leadership in China, and they know what they're doing. Believe me, they are doing the right thing, the right policies, and encouraging growth in their country. But again, that country doesn't want too much growth also. You have to bear in mind, too much growth for China will increase the costs. Cost is very sensitive to China. And a lot of policies now in China is how to produce outside China. They cannot afford to produce a lot of products in China itself.
You've made significant investments in India, a key market for you. I think something to the tune of $3 billion for that port in Gujarat, for instance. I'm just wondering what the outlook is for you. Are you intending to invest more in India?
Definitely. India is a very, very unique market, and India has huge growth potential. When you look at China and India, they're both 1.4 billion something. China traded 100 million containers. India trades maybe 14, 15 million. There's a huge potential for India to grow. And India is eyeing the African market, eyeing the European market, and with the new strategy and initiative between the United States, UAE, and India, taking cargo from India all the way through UAE until it reaches Europe. These are initiatives to create new routes to get Indian products to the world.
For the Indian market, for instance, what might you be interested in? You know, we've seen maritime investments, port investments. In the next 12, 24 months, what might you be keen on?
Well, we already have good terminals in India. And as you know, we announced the big one in Gujarat, and that is in Kandla. That is still we're getting the planning permits, and it's going to be a big port plus an industrial park. So in India, we're looking at more industrial parks, more logistics ability, because the nature of the market and the congestions makes it difficult from the ports to the destination. And that's why we invested in rail connection. We are the largest private rail company in India today.
There is an Indian port operator in Adani. We know that you compete with Adani for port projects, maritime projects. I'm just wondering whether you see the U.S. indictment against Gautam Adani as an opportunity for you to have the upper hand in some of these projects.
No, I don't see it that way. You know, these things always happen. Adani is a big conglomerate. Adani is big in bulk, in mining, and we are in containers. I don't see really any conflict with that. We compete, yes, we work together, but we have more in container terminals, and we don't have any bulk in India.
How about in terms of the business in Africa? What kind of potential do you see in that continent?
Well, the continent, we've been in the continent for over 20 years now. We have facilities. We are operating in 48 countries in Africa. We are a big logistic company with Imperial, supplying all kinds of products to the last mile. Of course, we have ports that we're developing, and we are continuing to develop. The recent one is in Tanzania, which is working beautifully. We're expanding our port in Mozambique, Again, we're building a big port, a new port in Senegal, almost 800 to 900 million euros. That's under construction. We have also another port in Banana in DRC. We are familiar with the market in Africa. Market is difficult, but it needs people who understand the product.
Could you talk to us about your plans for expansion? We know that you made acquisitions recently in Hong Kong, for instance. Might there be other expansion plans, acquisition plans?
Well, of course, we announced cargo services in China and the Far East. This is very important for us. Chinese market is big, dynamic, it's growing. We are in Qingdao, and we are now investing in logistics. We have also another logistic in Laos, Savan Logistics, we just acquired. We also acquired Silk Logistics in Australia, which connect between the port and the destination throughout Australia. And we continue to grow our logistics business, where it is very essential to connect it with the ports.
You've expressed optimism for the year ahead, despite perhaps impending challenges. I'm just wondering what you deem as a risk to your business then?
Risks for us are technology. With any business, technology advancement, technology disruptions, these are what really concern people because we have no control in that and we don't know what's going to happen, but we are investing in technology heavily.
In terms of the maritime and shipping industry, a lot of focus is on sustainability. Where are you in your efforts for that?
Well, we have a target of 42% by carbon emission-free by 2030, and we are reaching that target. We took all the steps to make sure that happens. We have changed a lot of all of our machinery from, for example, combustion engine to gas or electric, which reduces the footprint tremendously. This is part of our DNA, part of our operation, actually. And I can tell you, how people talk about sustainability and they think it is going to cost more money. Actually, sustainability saves you money.
DP World CEO Sultan Ahmed bin Sulayem is speaking to us exclusively in a rather rare interview. Now, here are some of the stories we are following as well. Amundi is said to be interested in acquiring control of Allianz Global Investors as deal-making heats up in Europe's asset management industry. Sources tell Bloomberg Amundi has been holding on and off talks with the German insurance giant for several months. Possible structures could include a full acquisition by Amundi or a combination, leaving Allianz with a sizable stake. Nippon Steel says it's still confident that its $14 billion acquisition of U.S. Steel can be completed by year-end. The company's vice president says the deal can be done if it passes due process and is approved by the outgoing Biden administration. Both the current and incoming U.S. presidents opposed the takeover, which is currently under review by a foreign investment committee. And Chinese builder Country Garden sales slump got worse in November, with revenue falling 52% on year to $414 million. That's due in part to a deliberate down market push to focus on smaller cities and migrant workers. The company is in talks for a debt overhaul but has missed its target date for getting key creditor support. And still to come, why the political unrest in South Korea could lead to fewer Chinese tourists. Analysis next. This is Bloomberg. All right, India's just kicked off its trading day. We're seeing gains for a fifth day in a row. The Sensex up 0.2%. Of course, when it comes to India, all eyes on the RBI meeting on Friday. Investors pretty much expecting an easing on the back of that GDP data, which we got recently, falling way short of estimates of the RBI. I think GDP came in excess of 5%. The RBI anticipating 7% growth. In terms of the rupee, 84.7275 is what we're looking at, pretty much flat. flat versus the USD. Again, Sensex up 0.2%. Nifty Bank Index, though, flat at this point in time. Now, we continue to keep a close watch on Korean assets and the economy amid the political turmoil. Even before President Yoon's brief declaration of martial law, its stocks and currency were already among the worst performers globally. Let's look at the potential impact on Korean assets, exports, and tourism. Avril's back with us, along with Bloomberg Intelligence senior analyst Catherine Lim. Let's start with you, Avril. I mean, we know that the assets have been under a lot of pressure, underperformance pretty much.
They have. They are among the worst performance in the world this year, whether you're talking about stocks or the currency. But they have stabilized a little bit from the onslaught on Tuesday, late Tuesday night, especially for the Korean won. I think the question then becomes between the Korean won and the stock market, which would perform more poorly. And for that, our stocks team have actually done some analysis. They've flipped and looked back at the history books to the period in 2016-2017, where we saw a similar episode in South Korea, where politicians then were also seeking the impeachment of the president at that time, then President Park Geun-hye. That was something that dragged on for months as well, before getting approval from the Constitutional Court. And over that period, what was interesting was how stocks managed to clock gains. I think it was about 3%, but the Korean won actually came down about 5%. So this suggests that we could see among the two, the worst performer being the Korean won. And don't forget, this time around, the growth backdrop is a lot more questionable, right? Because growth in South Korea has been tepid. We've also seen about $14 billion being pulled out of South Korea's stock markets in the past couple of months. And that is something that will have knock-on effects for the Korean won, given the stock market outflows.
We're expecting volatility in the Korean won. It doesn't change the fact as well that it is the worst performing currency in Asia this year, down about 8% versus the USD. That must be great for travelers, for tourism. I mean, I certainly look at the currency before I decide where to go.
Yeah, absolutely, Haslinda. If you actually look at Chinese travelers going into Korea, they're up like 160% on a year-on-year basis, up for the first 10 months of 2014, of 2024, really. And then, if you look at it itself, the numbers were actually still going pretty strong, into the early Novembers. I'm still waiting for the numbers to be out. And then we now have this martial law scare, and it's really bringing a lot of the question mark as to how much disruption we're going to get into the year-end holidays. And the last thing that anyone wants during the holiday is to have public transport disruption. We've heard about nationwide labor strikes being called for, in the lead up into the potential impeachment. So a lot of question marks. And I do have Chinese friends around me who's like really wondering whether they should continue their holidays in South Korea.
And speaking of strikes, we know that, Korea railway workers will be going on strike starting today. That adds to that labor union strike that we're already seeing in the country. And the other thing is, people talk about the upside, right? When it comes to the markets, there's potential opportunities to buy. If you take a look, Avril, at, the themes of supply chain disruptions, chips, perhaps buy the dip.
Yeah, I think that is something that investors are more seriously considering. You think about how the political developments in Korea have kind of garnered all this global attention, right? What is that going to mean for longer-term investors? Maybe they take a closer look at the South Korean markets, the longer-term investors that are looking for value. And you look at valuations in South Korea, they are really cheap. I think on the Kospi, it's trading something like 8 times forward earnings. It's still really underperforming if you compare it to the region's benchmark, the MSCI Asia Pacific. But there's also a sense that it is cheap for good reason. I mean, you know how the Value Up initiative, that's a key ambitious plan from the current government. That might be put on the back burner for now. Those plans might be cast in doubt. What is this going to mean for those efforts to unlock value for shareholders? It's interesting that we have the likes of JP Morgan today saying that, the bank shares that are bearing the brunt of those concerns, what is this going to mean for the Value Up initiative? They're potentially a buying opportunity because they are going to be continuing to try and unlock that value for shareholders. But it's not just about the Value Up initiative. You also look at some of these other concerns surrounding Korea stocks, notably the so-called Korea discount, which, of course, as the name suggests, is with Korea trading at a discount to peers. The idea that there's so much influence from the Korean chaebols that they actually seem to want cheaper stock prices because to avoid inheritance taxes. So these are risks for the market, even though potentially we might see some bottom fishing.
And Catherine, speaking of buying, the Chinese actually can buy Korean products online, or they can also buy at home. Increasingly, we're getting those products in the respective markets. That in itself is impacting, perhaps, the appetite to travel to Korea during such difficult times.
Absolutely, Haslinda. If you look at it, shopping has gone global thanks to e-commerce platforms,
Oh,
etc.
don't we know it?
Absolutely. We're just over Black Friday, Cyber Monday, so that's that. And really, cosmetics, if you actually look, take a step back. I'm going to bring in Shiseido because, just earlier this week, they were already telling us that, there's going to be headwinds ahead of that. I think the Korean cosmetics brands, Amore Pacific, LG Household, they're not alone too, because you're talking about a big market that they were eyeing, like China slowing down. And now we've got travel retail being now a question mark as to the impact of tourism in South Korea, notwithstanding, of course, e-commerce. That's bringing also a lot of the, more niche products into the market. And I'm just going to bring in that we've got Chinese cosmetics brand Margoping going public next week. So, that's another niche brand to actually watch out for.
You've got to also wonder which brands in particular, which companies in particular will be most impacted by the lack of, Chinese tourists going to Korea.
Well, it is still the in-house, Korean brands, and Amore Pacific has a whole suite of labels under them, from Suwasu right down to Laneige, and, even the top-end Amore Pacific brands. So they are the ones with, popular brands, and thanks to the K-pop endorsements that we've actually seen by this company. So I think they're going to be hit the hardest. But of course, over the last couple of years since COVID, they've also been diversifying into digital channels. So we'll have to see whether, the drag from this ongoing crisis will actually have as much as an impact on them. I kind of tend to think that, it's going to be a little softer, but we'll see.
April, just very quickly, the credit outlook for Korea, is that at risk?
We have the likes of S&P saying that investors might be a bit more cautious when they're looking at the credit ratings for the country, but they don't think that this latest political turmoil is going to prompt a ratings change. But that being said, if you look at how South Korea's credits and the credit default swap is, there is some expectation that there will be a tightening of the spread between South Korea and China, because you think about, you were alluding to this a short while ago, China stimulus, how that might boost the economy, improve the outlook for 2025. So maybe that could prompt a tightening of the spreads between Korea and China's credit default swaps. That's certainly something that markets are not fully pricing in just yet.
So it is a maybe. Bloomberg's April Hong and Bloomberg Intelligence Senior Analyst Catherine Lim, thank you. Now look at tomorrow's show. Before we go, we'll get market insights with Gamma Asset Management, more analysis on the political turmoil in South Korea, also from Control Risk Andrew Gillum. Join us tomorrow. This is Bloomberg.